Apple reported earnings Tuesday that were a surprise to people used to them rolling up big numbers. Sales of the iPhone, Apple's signature product, which accounts for roughly 2/3 of its sales, were basically flat. For the company as a whole, revenue grew less than 2%, which is a lot slower than it's been in recent quarters, to about $76 billion. Looking ahead, Apple said that revenue in the current quarter, which ends in March, would likely decline for the first time since 2003. Now, investors had expected some bad news because they had been beating down Apple shares for months. Apple shares are down about 25% in the past 6 months, and they fell only about 2% in after-hours trading. But the big question for Apple now is where it's going to get future growth. It's gone through this period of hyper-growth with growth of 20 and 30% based on the iPhone. But now sales of the iPhone are slowing. The iPad and Mac both declined in the most recent quarter. The Apple TV is having trouble launching their streaming service. Apple's working on a car, but that won't be ready for at least 5 years, and the head of the program quit last week, according to a story in the Wall Street Journal. So the question ahead for Apple is how it's going to reignite the sales growth that the company and its investors have been used to for the past few years, and which propelled Apple into being the most valuable company in the world by market cap. Apple also warned that it had begun to see signs of an economic slowdown in China. Apple's been doing gangbusters in China, and 3 months ago when he was asked on the call about an economic slowdown, Apple CEO Tim Cook said he hadn't seen any signs. Well, today that changed. Apple's sales in China still grew 18% in the most recent quarter, but that's down from 84% last year. And Apple said that it had begun to see, quote, signs of economic softness, unquote, just this month in its business in China.